Welcome back to another episode of Stock Talk. If you guys are new to my channel, thank you for joining. My name is Julie. In today's video, I want to give you a few stocks that I think are worth buying the dip on. Now, we've seen the market pull back since last December, beginning of January of this year. And with everything going on over in Europe, we are seeing the market pull back even further. And we are probably going to see the market pull back even further. However, this might offer you a great opportunity to get into some stocks that you wished you bought in 2020 when we had the major dip in March due to Corona and you didn't pull the plug. So I'm going to go over 5 stocks that I think are definitely worth it, taking a further look at and seeing whether or not you want to purchase them for the long term. So the first stock on my list today is American Tower. And American Tower was founded in 1995. It's a Massachusetts-based company, and it's one of the largest real estate investment trusts and is a leading independent owner and operator of wireless and broadcast communication infrastructure in several countries worldwide. Now, AMT is currently trading on the 200-day moving average. Now, this is a 3-year chart, and if you have watched my previous videos, you know that I like to look at the 3-year chart because in the last 2 years, we have seen tremendous growth in these companies, and we are starting to see some slowdown. So it's definitely worth taking a look at the wider horizon and really waiting for a deep discount before actually entering into any of these stocks. So if a stock is sitting on a 200-day moving average, I think that's a great opportunity for you guys to enter the stock. Now, the analysts are giving the stock an average price target of $283, so that will give you a 24% upside potential from where we are. Now, don't forget that this stock also pays a dividend, and the annual dividend yield is 2.19, which is more from moderate dividend yield. However, they have increased their dividend payout over the last several years. So if we go back all the way to 2017, we can see that their quarterly dividend payout was 62 cents and has gradually increased ever since. So that is definitely something to take note of. The next stock on my list is Trade Desk, and Trade Desk is a stock I personally have traded several times. I actually purchased the stock when I found out that they were going to do a 10-to-1 split, which was back in July of 2021, and I entered into the stock and I have sold out of it, but I have definitely waited for an opportunity to buy back into the stock at a really great price. So currently it's trading at $62. Now, Trade Desk is a California-based company. It's actually a technology company which provides a technology platform for advertising buyers in the United States, Europe, and Asia. And through its cloud-based platform, ad buyers can create, manage, and optimize more expensive data-driven digital advertising campaigns across ad formats, including display, video, audio, native, and social, on a multitude of devices, including computers, mobile devices, and connected TVs. Now, analysts are giving the stock a very strong buy rating, and we can see that they have their price target set at an average of $102.22. And that leaves you with an upside potential of almost 64%. So that is huge. So if you guys are looking for a company that you can buy today and then just let it sit and do its thing and not have to worry about it, I think this is a great opportunity for you guys to get into this company on the cheaper end. Like I said, it's trading around $62 and it's sitting on the 100-day moving average. Now, there is, of course, a possibility that the stock could fall a little bit further. And if it does, then you could just average down onto this position. But I think for the long term, this has great potential. But of course, you guys always want to make sure that you do your own research on any of the stocks that I mentioned for you guys today. But if we take a look at the history, we can see it did bounce off the 100-day moving average back in May. Then it also bounced off the 100-day moving average just back in January. So we would want to wait for support to make sure it does bounce back off. And if we take a look on Seek and Alpha under the growth potential, we can see that year over year it grown 43%, and the forward revenue growth is expected to be almost 34%. Looking at the profitability, we can see that the last trailing 12 months we had an 81% margin profit, and the sector medium only had a 50% profit margin. The third stock for today is Nike, which I think we're all familiar with, the athletic footwear company, which was established in 1964, which has its headquarters in Beaverton, Oregon. Now, Nike does have earnings coming up, and I believe it's March 21st, so let me double check. So March 21st is when Nike's having their earnings coming out. So be sure that you watch out for that date, because if earnings are worse than expected, we could see the stock drop even further. However, if the earnings are coming out better than expected, then we could see a jump in the stock. Now, I would probably wait for an entry somewhere around 109, 110, and that's because that would be the 200-day moving average. And if we look back, we can see that we had previously resistance in that area. So if you drop down to that price level and found support, then our resistance line would become our support line, and that would be an excellent opportunity for you guys to purchase into this stock. Now, this stock has a very strong buy rating. We can see we have 17 buys and 4 holds and no sells. And the median price target for the stock is $182. So that is a whooping 50% upside potential from here. Additionally, Nike does pay a dividend, which it is a low dividend yield. It's not even a full percent. However, nevertheless, it does pay a dividend. So that's always great to know. And then taking a look at the profitability of Nike, we can see that the last 12 trailing months, we had a 45% margin profit, and the sector median is falling by 36%. The next stock on my list for today is Disney. And Disney to me looks very attractive. It's sitting on the 300-day moving average. Now, this is one of the stocks that actually got hit really hard during the pandemic, but has made really nice recovery since then and had a new all-time high of $203 back in March of 2021, but it's now sitting on the 300-day moving average, which that is a great opportunity for you guys to buy Disney stock. Now, of course, again, with everything happening right now, we could see the stock drop even further, but this would be definitely a great opportunity for you to start a position in Disney. And you could always average into the position if it does fall further. Now, the analysts are currently giving Disney a moderate buy rating, but it still has an average price target of $193, and that is a 46% upside potential from here. So again, if you guys are looking for stocks that you can buy and hold now, then this is definitely a great contender, I think. And my last stock for today is Shopify, which I think is going to give you one of the deepest discounts. It was trading at $17.62 just back in November of 2021 and it's currently trading at $514. So, and it's sitting on the 300-day moving average. Analysts are giving it a moderate buy rating and it has an average price target of $988, which is 91% upside potential from here. So if that doesn't scream buy, I don't know what does. Also, if we take a look at the growth, we can see that the revenue year over year is 57% and the profitability has been 53% for the last trailing 12 months. And if you guys don't know what Shopify does, Shopify was founded in 2004 and is a Canada-based company. It actually operates a cloud-based commerce platform, which is designed for small and medium-sized businesses. Its software is used by merchants to run businesses across all sales channels, including web, tablet, and mobile storefronts, as well as social media storefronts and brick and mortar and pop-up shops. Now, I did say that Shopify was my last stock for today, but I do have one more stock, which is Google. And I did make a video about Google because Google is actually doing a 20-to-1 split. And Google is screaming buy right now. If you guys do want to own Google, it's sitting currently on the 50-day moving average, and it's been finding support around the $2,500 mark. And if you guys want to own 100 shares of Google, you need to just buy 5 Google shares, and then when the split happens, you guys have 100 shares. And that is my personal plan. I already started buying Google and I will be buying Google on every dip that I can. And if you guys haven't seen my last video on Google, I will put the link in the description below so that you guys can check out this video. So anyways, as always, be sure that you guys do your own research and let me know which one of these stocks that you guys are mostly interested in. Be sure to comment below and I'll be sure to answer all your questions. And I look forward to seeing you guys in my next video. And of course, don't forget to hit that like button and subscribe to my channel. And I'll see you guys soon.